Hey guys, it's Kelly Higgins from Saving the Mompreneur. Today I'm going to tell you about how to set up your business on the banking side so that way you don't have any roadblocks moving forward. You're watching Video Thursday with Saving the Mompreneur. Okay, so setting up your business on your accounting and banking side can be a little overwhelming, but it really shouldn't be. There's just a few things that you should do once you're getting started. And these are tips that are for someone that maybe has an Etsy account or a blogging account and they're making just a little bit of extra income and you don't necessarily have a whole lot of liability out there. So what you're going to want to do is go to your state's website and register your business as a sole proprietorship. That's not going to take anything but your social security number. They won't even give you a tax ID number with that in most states, and that will make it a lot easier to remember. Now, with that sole proprietorship, you are going to want to set up a couple of bank accounts. That way you can keep your money straight and you know what you need to set aside for taxes. Every state is different, so please consult your accountant when it comes to this information. Now, when you go to your bank, you're just going to want to ask for a checking account and a savings account. At least that's how I prefer it. With the checking account, you're just going to set up a DBA account, and that stands for Doing Business As. So on the name of the account, you're going to put Kelly Higgins, DBA, Saving the Mompreneur. And then that's how your checking account will be set up. All of the money that you make off of your business needs to go into this account directly. All of the expenses that you have for this business need to come out of this account directly. Now, this account is not going to be if you want a Slurpee from 7-Eleven or an afternoon ice cream cone from the Dairy Queen. This is going to be for paper, pencils, paying for your domain on GoDaddy or wherever you have it hosted, paying for any kind of theme for your blog. I mean, anything like that that is a real business expense that does need to come out of this account. Now, if you want to pay yourself, that also needs to come out of this account. And even if you have this account set up at your same bank, like for me personally, I have a couple of different businesses and they all have their own checking accounts. But I also have my personal checking account, and that's all tied together online. So when I pay myself, I don't actually technically write myself a check. I just transfer money between accounts. Now, I do keep track of that so that way I can pay correct taxes on that money that I do take out for myself. Now, the savings account, you might be asking what that savings account is for, and I have just found this to be the easiest way to keep track of this, but all the money that I make off of any of my businesses, I just calculate what 30% of that revenue is, and I transfer that automatically over to that savings account. That way, the end of the year or beginning of the year, whenever you do your taxes, you have that money saved and ready to send off to the IRS. Now, your accountant will help you with all of that, but I do that just as a safety precaution. I would hate to get to the end of the year and be surprised with a big tax bill and not have any money saved. So whenever I deposit money, I almost always go straight home, straight to my office, wherever, and automatically transfer 30% of that deposit straight over to this savings account. We do that on everything in our house. My husband does a lot of lawn care and mowing in the summer, and that's a nice little extra income for us. But off of every yard he mows, I put 30% over to the savings account. Now, I have never owed more than what was in that savings account, but I have owed less. So at the end of the year, when I do pay those taxes, if there is extra in that savings account that we did not have to pay in taxes, then that is considered profit, and that is an earning on your business. So congratulations. Your main goal when you're in business is to make a profit. So whatever is left after saving for taxes and paying your business expenses, that is considered profit, and that's great. So those were my tips and guidelines on how to set this up correctly. If you feel like you have more liability than what you might have or might want to have as a sole proprietor, then you're probably going to want to talk to your lawyer about setting up an LLC or something that has, which stands for limited liability company. That will protect you a little bit more legally, but definitely consult your lawyer about what kind of business to set up. Most of us out there are probably just going to be a sole proprietorship once we get started. Once we start growing and get bigger, then that's when you're going to want to reevaluate and look at maybe changing the way your business is set up. Also, every bank is different, so any kind of fees or anything is going to be per bank, and you're going to want to check that out with your bank. If you are getting charged fees on your checking account and your savings account, please look at other banks, because there is no reason for that, and there are a ton of banks out there that want to have your money sitting in their bank, and they'll let you do it for free. So don't feel like you have to pay for a checking or a savings account. Especially a savings account, they should really be paying you. Now, on that savings account, when you're transferring money over for your taxes, you should not be transferring money out except for maybe once a year when you pay your taxes. So you should not ever have to worry about any fees of withdrawing too much. All right, guys, well, I hope that helps. If any of you have any ideas of things that you would like me to cover, please feel free to contact me at SavingTheMompreneur. And until next week, have a great one. Bye-bye.